All right, good evening, ladies and gentlemen. All right, now, so thank you for joining me. All right, now there's lower than expected numbers over here. All right, but we will do fine. All right, because it is probably not expected. Everybody's probably expecting me to run the session tomorrow. All right, but all right, there's a mentorship schedule clash. All right, so I have to bring forward one day. All right, now, so I want to run this session because it is the June option expiry week. All right, now, so I want to talk about how I'm going to tackle some of the expiring trades, right, and then also move forward, all right, to see how we can generate a little bit more income, right, with this ever uprising market, all right, with more and more threats, right now. So I want to talk about what we can do, right, okay, what are some of the cash flows that I can add to this particular portfolio, right, and then, all right, we'll see how we take things from there. All right, now, so if you're joining me over here, all right, just leave a comment, say hello over here, all right, and all right, Facebook user, sorry. All right, now Facebook user, all right, can you please read the banner over here? All right, I'm not sure if it's your first time joining us or you've been here before, all right, but please go to this website, streamyard.com/Facebook, all right, and then you'll see a Facebook banner over there, all right, click on it, all right, you'll approve your profile, all right, so that next time you leave a comment, all right, I will be able to see who's leaving the comment itself. All right, now, so please also understand, all right, if you do ask questions during the Facebook live session, all right, I will only respond, right, to profiles that are actually shown. Yeah, okay, so if you appear as a Facebook user, all right, I will not, all right, be answering your questions. All right, so please be aware, all right, those are the systems in place and the rules of how we run the session. All right, now, so I don't want to waste too much time, all right, but without further ado, all right, let's get to the market updates. All right, so we will talk about the markets, all right, how does it look like, all right, and then we'll move things from there. All right, now, so ladies and gentlemen, all right, this is the SPY, all right, as we do every single week, all right, and the SPY is still breaking out. All right, now, so we had the breakout over here, all right, okay, and, all right, it tested the support, all right, okay, and now it's breaking out to a new level. All right, now, so what's going to be expected from here, all right, is that, all right, we're probably going to be testing, all right, the next, high, all right, over the last 3 years over here. All right, now, so we drag things over, we just broke out from this 431 high or the 4,300 level. All right, so this market can try and surge, all right, for the next level, which is 4,600. All right, will it get there? All right, it's hard to tell, all right, because the interest rate announcements have just came out yesterday. All right, so that's already out of the picture. All right, now it's all about the markets, all right, and when does it reach what we call the exhaustion phase? Yeah, okay, it's all about the exhaustion phase in the market right now. Okay, because right, the technologies are still leading the pack. Yeah, okay, the foremost are still chasing this market. The algorithms are still playing, right, the tune of the music right now. So some of you may be asking, Terence, why is there kind of like no threat or no end to this market? Simple. For one reason that you see on my chart right now, the market is still not overbought. Right? So whether we like to say it or not, the market is still not overbought. Right? So that gives the technical traders some room, right? Some room over here to continue edging it higher. Yeah. So the key is, all right, okay, we have to ask ourselves, all right, okay, are stocks now, right, decently valued, right, or are many of them really, all right, what we consider excessively valued right now? Yeah, okay, because the economy is not improving. Yeah, so while interest rates are not going up, yeah, okay, because that's the Fed stance. Yeah, okay, but it doesn't mean, all right, that the economy is doing better. Yeah, okay, now, so what you need to understand, all right, is that you can still go out there and, chase after stocks, right? But if you're chasing after any stocks at all, right, you better make sure you're chasing after what we call, right, the undervalued stocks. Yeah, okay, all right, because that will lower your risk, all right, okay, and, right, keep your portfolio capital safe. Now, I say keep your portfolio capital safe because, right, wow, right, chasing some of those momentum stocks will allow you to make some money, right? But, okay, if you're not someone, right, who can control your emotions well, yeah, okay, you may end up losing, all right, or getting caught, right, when the market turns, right? And, okay, if you hold on to these losers, right, it can actually come crumbling down and wipe out your entire accounts, right? And this is generally very normal, right, when it comes to newbies who are entering the market, right? Why? Because, the cut losses are there, but you just cannot, bear with the losses, right? So you just keep saying, hey, it's going to come back, it's going to come back, it's going to come back. But, right, when it doesn't come back, right, then things are already left until it's too late, right? So don't put yourself in that situation. While I know that this market may seem like, hey, I'm missing things out, right? Should I get in now? Should I chase it? Right? What's the point? Right? You're already too late. right? So sometimes it's actually good to be patient, right? Because when you're patient, right, yes, you know, you may make less money, right, but the money is always there. Yeah, okay. As long as you live another day, right, the money is still there for you to go grab it, right? So sometimes, right, this is one, you know, one skill or one very important lesson that you have to learn, right, which is to be patient. All right, now, so without further ado, all right, let's get to our portfolio position, right, so that we, you know, we don't have to take things too long, right, to complete our session today. All right, now, so, you know, many things have not changed because we still assign our WBA shares. And, you know, while WBA shares have started, you know, improving a little, yeah, okay, now let's get back to the dailies. All right, there we go. All right, now, so while things are improving over here, I'm still hesitant, right, when it comes to selling a covered call, right? Why? Because, right, we are now inching over the 50 RSI. So once it starts to break above the 50 RSI, right, this stock can actually start gaining momentum, right, because it's been way oversold for a very long time, right? So if it starts busting up, right, I don't want to get caught, right, with selling a call options, right, on the stocks that I own. So I'm just gonna stay, sorry, I'm just gonna stay patient for now. Right now, next one over here is I do have to deal with a covered call, right, on Intel, right, that I sold that expires tomorrow. Right now, this call option has a strike of 32.50, right? So we can clearly see that Intel, right, okay, had a dip, right, before a surging run for the entire week, right? So it is this week itself, right, that basically killed our call options, right? So what am I gonna do? Very simple, right? If I don't do anything, right, my shares will get taken away from me, right, at 32.50, right? Wow, right. At the meantime, right, I do think this explosive move, right, is actually going to exhaust itself, right? And right now is already hit, right, what we call, right, okay, the overbought level, right? And if you look at things over here from this high to this new high over here, right, we still have a chance of a negative divergence forming on the RSI. So if that actually plays out, and if that happens, right, okay, we're going to see Intel, right, dip over here, right? And all it takes, right, is for the technology index, which is the NASDAQ itself, right, to come falling off, right? Because once the NASDAQ comes falling off, right, all tech stocks will be sold off, right, together with the market itself. Yeah, okay, now, thank you very much for letting me know. All right, Facebook user. All right, okay, now, so yes, let me remove my banner. All right, thank you. All right, but you are known as Facebook user, okay? So please go to a link, all right, and approve your profile, yeah? All right, now, so in the meantime, I'm already caught, so I can't do anything, right? I'm stuck, all right? So I can only manage the current position I have. And you know what? It's not like something we have not been in before, right? Especially when it comes to Intel, right? Now, so looking at things, all right, okay, to close this trade, all right, I'm about what? I'm about $3.32.50. Yeah, I'm about $3.30 in the money. All right, now, so looking at this, there's one more day to expiry. All right, we are here. All right, 32.50. All right, there we go. All right, so it's going to cost us about, you know, $3.35, right, to close this trade today. All right, now, so what I'm going to do is I'm going to delay the time frame, right, to the end of June. So I'm going to give this stock another 2 more weeks over here. All right, so by giving it 2 more weeks, sorry, all right, I need to be able to collect, yeah, okay, some premiums, all right, to account for the losses I have, right? Now, so if you look at things, right, I can do just that. I can actually inch my call strike up by 50 cents because right now what I have is a 32.50 call, right? I can actually swap it to a 33 call and try to get 320, right, for this, right? 320 for this. So what it does is it creates what we call a 10-cent deficit, yeah, okay, or 10-cent debit, right, to complete this move over because I'm paying 330 to close what I have now, all right, and I'm getting 320, right, for moving it forward until the 30th of June. Yeah, okay, now, so let me try that and let's work it out, okay? All right, so I'm going to move that right now. All right, so I'm going to close my Intel trades. All right, I'm going to move it to, hang on for a minute. All right, there we go. All right, now, so I decided to inch it up, all right, and pay about 15 cents. No, I got it closed for about 14 cents over here. All right, now, so if you look at things over here, right, I've did bought 5, right, of this trade over here, right, which means I closed the 32.50 call, right, and then I sold the 33 for June 30th, all right, and I spent 13 and 8 cents, all right, on an average price. So what I'm going to do is I'm going to record this as a 14-cent debit, right? So I basically spent 14 cents, right, okay, to delay this, right, until the 30th of June, right, and also move the barrier up by 33, right? So what it does right now is by 30th of June, right, if Intel shares come back off, right, and goes back below $33, is that possible? It is, right? All it takes is a sell-off from technology sector itself, right? Intel is going to be dragged all the way down, right? So if that happens and the stock goes below $33, right, then what we have on our hands is that this call option is going to end up expiring worthless again. All right, okay, now, so I'm spending, 14 cents, right, to clear up this current mess that I have. And when I sold the 32.50, I actually collected 36 cents. So that's actually fine. Yeah, okay, if you realize how things work out, yeah, okay, I'm actually still getting some cash flow, right, out of this entire deal, right? So if I record this down as 14 cents, right, so what it does, right, is it lowers my collection, right, to $110. Yeah, okay, now, but I'm still collecting some cash flow out of this. So that's generally fine. Yeah, okay, now, so what happens over here is next. Right, I have a 30th of June. Yeah, okay, I have a 33 call. Right, we're doing this on the 15th of June over here. Right, and I'm recording this next one, right, at 0 cents. Right, now, why 0 cents? Because here, right, I'm paying 14 cents for it. All right, now, hang on. This should be wrong. Did I pay 14 cents to get out? Yes, I did. Correct. That's correct. Right now, so there goes. All right, now, so I have a 33 call right now. I get to keep my 500 shares, which cost me $42.50. Right, so I don't basically, by doing this, I don't have to recognize, right, the loss of those shares. Yeah, okay, because I get to keep them. Yeah, okay, and I get to delay my, my trade all the way to the 30th of June now and give the stock some time for it to come back off. Yeah, okay, so this is basically a management, right, when things go wrong, right, on a call option that I sold. Yeah, okay, now, so that's what I'm doing on Intel over here, right, and the next one we have on our hands is Verizon. Yeah, okay, now, so Verizon has also bounced a little, yeah, okay, which is common, right, when it comes to, all these defensive stocks, all right, so, so that's what we're talking about, right now. These counters have bear the brunt of sell-offs, right, okay, so it's severely undervalued, right, I kept saying this over and over again. All it needs, right, is for buyers to recognize that happening, right, and start buying the stocks, right, and people are doing that now. Right, so I'm going to give it some room for it to continue running higher. Yeah, okay, now, so I'm not doing anything with it. All right, the next one over here is we have Tyson Foods. All right, now, so we have Tyson Foods over here, right, and actually got filled last week on Tyson Foods. Right, I actually sold the call options, right, for, let me just double check. I have the positions, all right, and how much did I get for those Tyson Foods over here? Yes, I've 52.50 call options for just 10 cents. All right, so it was actually filled last week. All right, so let me record that down. All right, for 2 shares over here. All right, sorry. All right, I'm just having a little bit of a cough. So this was just done last week. So last week would have been the 9th of -7, -6, 9th of June. All right, there we go. All right, so that was worth $20 over here. All right, now, so looking at how things are, right, I have the 52.50, right? Now, so looking at where Tyson Food is, all right, hang on, okay? There we are. All right, now, so looking at where Tyson Food is, it's about 50.25, 50.25. All right, now, so leaving it there, all right, okay, tomorrow this call option is going to expire worthless. Right now, so when it expires worthless over here, all right, this is going to become 0. Right now, so when it becomes 0, this $20 cash flow is basically ours. Right, it's basically ours. All right now, so that one is done. All right now, HBI, we didn't do anything. All right, so we're going to keep it as well. All right, but this stock is slowly inching up as well. All right, okay, coming back higher, so I'm just going to leave it. All right now, the next one over here is Pfizer. Pfizer is enjoying the run, just like WBA. All right, so our Pfizer stocks are recovering as well. All right, so we're leaving it as it is. All right, so we got a sign at 47.50. So we've got about another $8 to go. All right, another $8 to go. Am I expecting to go all that way? Not really. All right, okay, but all right, I just feel that it's not time to add some call options yet. All right, I probably want to wait for it to get overbought before I start selling some call options. So for now, I'm still waiting. Yeah. All right, hang on for a minute. All right, for now, I'm still waiting on it. All right, now next one over here is Hawk. All right, so Hawk has come back higher as well. All right, but our Hawk shares are signed at $36. All right, so let's get to Hawk. All right, so Hawk is about $34.70 now. All right, okay, now, so let's see if we can get anything, all right, for a $36 call option. All right, so let's go to 30th of June, all right, because it is the end of June, right? All right, so for 36 call, I can probably sell it for and collect about 30 cents. So if I can generate some cash flow, so the big question is, why not? Why the heck not, right? Now, so let's go to Hawk. All right, let's go 30th of June. All right, 36 call. All right, I'm going to try it for 30 cents. All right, I've got 400 shares. All right, it's done. Nice. All right, there we go. All right, so I'm filled for 4 options on the Hog 36 call over here for 30th of June. All right, and for 30 cents. All right, so that is done. Yeah, okay, now that is done. All right, so let's go ahead and record that down as well on our portfolio. Four options, right? Hog. Right, covered call, right? 30th of June. All right, what am I looking for? All right, 36. 16 of, no, 15 of June, right, and 30 cents. So that's going to add another $120, all right, okay, to our cash flow. All right, so I'm not sure where we are for the month, all right, but yes, we're definitely getting closer. We're 1,009. So I'm actually happy with that, all right. So bit by bit, we're going there, all right, we're getting there. All right, so our next position is we have Macy's, all right. Macy's are at $20. All right, so Macy's is down about $16, so we probably have to wait, yeah. Now, so this one, by selling the $20 call, is not going to pay me anything. So it's pointless for me to try to do a trade at all, right? So I'm just going to hold the stock position. All right, now, next trade over here is Triple M. All right, now, so Triple M, we do have 105 call at 30 cents that expires tomorrow. All right, so where is our Triple M now? Our Triple M is at $103. All right, so here's what I'm going to do. I'm actually going to leave it. Yeah, okay, I'm actually going to leave this trade, all right, and then, all right, see what happens tomorrow. All right, so right now, if I close it, I've got to pay 18 cents to close it. Yeah, okay, but if I move it, all right, let's see if I move it. Wow, it's paying quite rich. Maybe I should do it. Yeah, let's go ahead and do it. All right, now, so here's what I'm going to do. All right, I'm going to pay the premiums. All right, so 105 call, it's about 19 cents. All right, so I'm going to pay 19 cents to close it. All right, so let me show you. I'll buy this back. All right, and I'm going to move it to the 30th of June. I'm going to sell the 108 call. All right, and that one, I'll probably try to collect about, what, 56 cents for it. All right, so this trade, all right, if you see it over here, all right, it's going to net me about a 40-cent credit. A 40-cent credit. Why not? Can you see that? That's additional cash flow again. All right, so here's what I'm going to do. I'm going to do a Triple M. All right, so let me get that trade off. All right, so first I'm going to close the 105 call, sorry, not puts. Yeah, okay, and then I'm going to sell the 108. All right, I've got 2 of those. All right, and 40 cents. Let's see if I can get it filled. All right, I got it filled at 35. I didn't want to fight it too hard. It's additional cash flow anyway. All right, so you see over here, all right, I just closed the June 105 call. All right, okay, and then I sold the 108 for 30. So I did this for two options over here at a 35 cents credit. Yeah, okay, so I collected an additional 35 cents. All right, so here's how I'm going to record this. All right, so we have closed this trade. All right, so this would have been collected, fully collected. All right, and then I would have sold the 30th of June. It would have been 108 call. Right, we did this today on the 15th of June. Right, and I collected another 35 cents. This is good. All right, because it pays me another $70. All right, and you know what? Look at this. We are almost close to 2,000. Ladies and gentlemen, we're almost there. All right, so as much as you think that I'm not gonna hit it, all right, I'm actually getting right close, just $30 short. Yeah. Okay. Now, am I gonna get there? I don't know. All right, I really don't know. All right, but let's see. Okay. All right. Now, so over here, all right, next trade, AT&T. All right, so I have AT&T over here at $16. So I'm assigning the stock at 18. So not too far away as well. All right, can I get anything for 18 calls? No, it's not worth it. All right, so nothing at all actually. Yeah, okay, now, so our next trade over here is FITB. All right, so I have FITB, $23 puts. All right, now we're going to portfolio puts now. All right, so FITB, $23. It's at 26, ladies and gentlemen. All right, okay, it's at 26. So my $23 puts are effectively worthless. So what am I going to do? All right, I'm going to let this put option expire worthless on its own by tomorrow. All right, so when it expires worthless tomorrow, all right, I'm going to recognize all $260 worth of this cash flow. All right, our next trade, APA, Apache, for $35. All right, so what am I going to do? Apache, all right, where's my Apache? Here we go. All right, so Apache is up. All right, we're close to 35. Look at that. All right, so if I close my 35 today, I probably got to pay about 60 cents. All right, 60 cents to close it. All right, here's what I'm going to do. I'm going to move it forward by a month now. All right, okay, now, so I'm going to go to my July. All right, so for my July over here, all right, I'm going to move it to, how about this? Let's move it to 32.50. Yep. Let's move it to 35 as well. I'm comfortable with the strike. All right, now, so doing that, all right, we're going to generate $138 in cash flow for each option. All right, so this is a $35 puts. All right, I'm going to buy it back first. All right, and how many do I have? I have 3 of those options. $138. All right, there we go. I got it for 136. All right, now, so some of you like to ask, Terence, what does the label of the order mean? It just means this, whatever I just did. All right, now, so over here, you can see, all right, that I bought, all right, the 16th of June, $35 puts, and I sold the July 21st, $35 puts. Yeah, okay, now, so the price difference, 196 and 60 cents, will give me my 136 credit. So that's how I end up getting the extra 136 credit. All right, now, so this is closed for today. All right, and I'm going to recognize all the cash flow I collected. Why? Because, all right, I moved it to next month, and in that process, I pocketed an additional $1.36. Right, so instead of recognizing, right, the $1.96 that I did, right, here's what I'm going to do instead. All right, I'm going to move this. It's going to be trade 89 now, right? Apache, all right, for $35. All right, we did it today on the 15th of June, all right, and we collected 136. So what it does is it pays me an additional $408 in cash flow for the following month. All right, so I've also got started for the next month as well. All right, so my next month's cash flow, all right, is now sitting where? Right, sitting at $705. Ain't too bad. All right, we're about 1/3, all right, of our target. All right, so slow and steady. We're getting building as well. All right, now so our next one over here is VFC. All right, so we have VFC for 2250. All right, so let's have a look. All right, so this one is still way off. All right, so we probably got to wait. Yep. All right, let's wait it out. Doesn't pay me anything. All right, so we'll just sit. All right, it's in the middle. All right, so we're gonna hold on to the stock, but here's what we can do as well. All right, if you look at this, right, the 2250 for July actually pays me 20 cents. So while waiting for another month, right, which is about 30 days, right, if I can generate a $20 cash flow, right, while waiting for the stock to go back to break-even price, I think I'm okay with that. Actually, I think I'm happy with that. But I can only do it next week. Why? Because I'm still holding the portfolio put position. All right, so basically, all right, let's see. Hang on for a minute. I realized that I'm holding the portfolio put. So if I close it today, I've got to pay about $330. If I move it to the next month, I can get about $340. Nah, I'll just take the shares instead. All right. So if any, apologies. All right. If anything happens tomorrow, I'm just gonna end up taking the shares. All right, and then we'll do with it next week. Okay. All right. Now, so this one done. All right. Our new trade, all right, which was done last week, was with Gillette and MO. All right. So I'm not gonna do anything to these positions. All right. So I'm just gonna end up recognizing the cash flow, right, for the first half, right, of the 2 months. Yeah. Okay. Now, so this is gonna end things off, ladies and gentlemen. All right. Now, so we're gonna finish the month, all right, with $1,970 in cash flow. All right. So I don't think it's too bad. All right. We missed the target by $30. All right. But coming from right the beginning of the month where you saw how we struggled, all right, I think we did pretty well. Yeah. Okay. Now, so that's what I have in store for all of you. Those are my actions that I'll be taking for this week. All right. Now, so tomorrow, all right. Okay. We just have to keep a lookout for one expiry over here, which is FITB. All right. And the second one, which is this Apache is closed. All right. So let me make sure I reflect that. All right. Okay. The next one will be VFC. All right. So those are the two positions. All right. We close these two for profits as well. So that's done. All right. There we go. Closed. All right. This one will be closed tomorrow. This one will be closed. All right. There we go. That's it. Okay. All right. Now, so ladies and gentlemen, those are my actions over here. All right. I'll just leave a couple of minutes for questions. So if you have, all right, just post them out, all right, inside the comments. All right. So Eileen over here, all right, what I did for Intel was this. All right. I closed the 3250, all right, which expires tomorrow. All right. Okay. And then, all right, I moved it to a 30th June $33 call strike, all right, for a net 14 cents debit. All right, okay, for this switch from $32.50 to $33 for 30th of June, I paid 14 cents, right, to do that switch. Yeah, okay, Eileen. So I hope that answers your question. And Elise, yes, I do see your comments right now. Okay, so thank you for hitting the banner. Okay, so are there any questions? All right, are there any questions before we end off today's session over here? So I will probably start loading up cash flow positions for July, right, in our next Friday's Facebook Live session. Yeah, okay, so when I'm back live next week together with you, I'll probably look towards adding new cash flows for July, yeah? All right. Welcome, Eileen. Okay, I've left some time, but it seems like nobody's going to be shooting out any questions. So if that's the case, all right, please remember to help me hit the like button, all right, share out the Facebook Live sessions to as many people as possible, all right, and all right, on my part over here, I hope you enjoyed the updates, all right, for this week, all right, and I'll see all of you next Friday, back onto the usual Friday, okay? All right, have a great weekend, everybody, all right, and I hope you stay safe in this market. All right, bye-bye for now, and good night. This is Terence signing off for this Facebook Live for Portfolio Cashflow. All right, bye-bye for now. See you soon.